Hello traders, hello everyone. Welcome to our new webinar. It's December 16th. So hope everyone is doing well. Just let me know if you can perfectly hear my voice. Can you see my screen? Is everything fine? NS is here. Tim is here after a long time. Hey Tim, how are you? Someone is also asking for dollar yen. Maybe I will take a look later. Yeah, I think it's now okay. Someone is saying that is something wrong with the sound. Can someone just confirm that everything is fine now? Anas. Let me just remove my phone here. Okay, so looks like okay, now it's okay. Perfect. So as you know, we have Fed, Bank of England and BOG this week, so should be quite interesting week ahead. As you know, everyone is just waiting what Fed may deliver. Keep in mind that somehow we are seeing markets now, the FX markets being sideways, so everyone is just waiting on this Fed rates decision. Now there's still expectations that almost 100% certain that they will cut rates by 25 basis points. Okay, but despite this, we are seeing dollar in a recovery here, away from that trendline support. So I think that it can be a very big disappointment. Okay, if maybe they don't deliver the cut, or maybe they will bring the hawkish cut, meaning that Powell will somehow highlight that they are done with cuts now, and that maybe they should be on pause. So in such case, I think that dollar could easily see much more upside. We know that economic projections for the US next year are quite strong, so and high. So that's why maybe they should be a bit more careful with cutting rates too far, because obviously this can bring inflation much higher. Okay, but obviously their target is still far away. So looking at the dollar overall, as you know, I have been bullish for a while, and I still think there is a chance for another push to the upside here towards 108 level. Keep in mind that we are tracking this subwave C, so it's the final leg of this corrective recovery. We are missing this final push higher to complete wave C, as I said, maybe around 61.8%. That would be ideal here around 109, but definitely can be even earlier. So for now, we still see some room left till we get this reversal in January. Looking at the 4-hour time frame, we successfully broke through this trend line resistance, and now we are pushing to the upside. Also, this current recovery on the dollar equals to decline on the euro. As you know, ECB delivered the cut last week, and also there are speculations that they could deliver 2 more cuts at the start of 2025. So that's why I think that euro dollar could also stay under pressure for another leg, maybe final push to the downside before we see maybe some stabilization. As you know, I've been sharing the chart of COT positioning. Large speculators are heavily short down here, and very similar compared to this levels that we were seeing back in 2022, and that's when we were seeing a massive reversal to the upside despite market being heavily short. So maybe something similar can be building up here, and I certainly think that we could see euro dollar trading higher, or at least reverse at some point at the start of next year. So for now, we are obviously not seeing any bottom yet, but I just think that this 4-hour time frame, it's pretty clear here. We have ABC recovery that perfectly stopped at 106.10, so that was a corrective price action. We have a broken corrective channel which signals for more weakness. Also, if we take a look maybe on dollar Swiss, as you know, last week we said and highlighted very bullish, clear bullish Elliott wave pattern. We also linked this with potential cuts from Swiss National Bank. They delivered cut even more than expected. They cut by 50 basis points, and they actually thought that they will firstly cut only 25. And what happens, as you know, market very nicely, as expected, moved back perfectly into that area around 89.40, which we highlighted as an open gap, and we said that a lot of times those gaps will get filled. So it was a perfect combination of central banks' decisions with the Elliott wave patterns and also with these gaps. Okay, and clearly this played out very nicely. But again, it shows us that overall dollar trend, in my opinion, is still here. But sooner or later, those pairs will move into very late stages of this recovery. Now, when it comes to dollar Swiss, also it's very important to keep in mind that there is a correlation with Swiss franc and metals, and I also think that metals are still having this ongoing downward correction. More weakness, I believe, will follow, and this makes sense when I also see room for dollar Swiss franc towards this 0.9 and even 100 point higher. And I will cover also metals a bit later. Now, also this week, as you know, we have Bank of England. They are not in a rush with potential rate cuts, but maybe there will be some speculations of what may do next, especially because on 1 or 2 days earlier we will get the CPI data from the UK. The expectations are 2.6 versus 2.3, so it looks like that inflation is still on the rise, and that's why maybe Bank of England is not rushing to cut rates. Basically, when it comes to cable, I'm quite neutral at the moment, but I'm watching some levels here on a smaller time frame. Okay, I've been highlighting this as a potential key support here around 1 to 6, but really no direction for me unless we see a push above 1 to 720. Then I would start calling much more upside, at least for the next few sessions. But on the opposite side of that, if cable after this week's events would come to the downside, and if suddenly we start seeing price breaking this trend line support, then watch the euro pound. Okay, I just think that euro pound could then see much more upside, and basically one of the reasons is that we have some very clear Elliott wave pattern here. There was a potential move to the downside within this wedge formation called an ending diagonal, and we've been tracking quite closely last week, and we with members, and we bottomed very nicely at the lower side of this pattern, and now what we are seeing is some very nice rise. So if after CPI data or maybe after Thursday we will still see weak pound, then I think that euro pound should be could be quite interesting to observe, and maybe we will see some nice push out of this wedge pattern, which could offer then some very interesting opportunities after pullbacks. Maybe even some intraday aggressive longs could already be discovered with the recent price action, but this obviously keep in mind that it's a bit risky because the pattern is unfolding ahead of the event. But overall, I just think that euro pound could recover. I also updated these longer term charts for our members today, and basically if you look and focus on these cycles, okay, you can clearly see that we are now at the lower range within this cycle. So it's pretty interesting that we have a time and price that comes perfectly together here. Okay, so time suggests that we are at the late stages of this current weakness, and also price is sitting at a very strong support here around 8,300. So I think that next year we could see a very significant reversal here on this pair, but I'm not really sure if this will be because of pound weakness or maybe euro strength. We will see how what will be the main role for this to turn to the upside, but I certainly would not be surprised to see some reversals to the upside in 2025, because we are at the lower side of this range. And basically this ending diagonals just maybe even adds to even better perspective and clearer view what may happen next year. Now someone is just asking for Aussie. Yeah, I'm looking at the Aussie, and as you know, everybody was on hold. But now, since they were on hold, okay, now there are greater chances that maybe they will cut rates on the next meetings. So that's why Aussie could still somehow can be limited to the upside. But when it comes to maybe on a higher degree time frame charts, I don't really like the wave structure much, but I can see some supports that could be playing out a very important role for a potential bounce in 2025, unless we see some very strong volatile moves here. But I would not be surprised to see a reversal to the upside, at least for a free wave recovery. Now, one of the most important structures that I'm seeing right now on Aussie is probably on here on the 4-hour time frame. Notice that firstly we have here move out of a triangle. Okay, that was a triangle that we've been tracking quite closely with our members, and then what we were seeing, a push out of a triangle. First thing that we have to understand, that moves out of a triangle are final in a sequence, meaning that there should be some limited downside at some point, and this this definitely can be the case, especially if we consider that that's maybe ongoing ending diagonal here. So I think that you should be So I think that you should be aware of maybe another new low here that is missing, but then watch for potential support at 6,300. So once again, as I said earlier, some of the pairs, these dollar pairs, could sooner or later move into this very important levels where I think that the dollar could face important turn. I'm not sure if maybe Powell maybe we'll see some volatile price action after a Fed rates decision, some very strong push to the upside, and then suddenly we topped out. Maybe we'll have to wait till Trump takes office, but definitely all the wave counts and the price action itself, based on the personality and the structures, suggest that sooner or later the current trends that we are seeing across the board will come to an end. And Aussie certainly would be on my watch list for potential longs, even if short term, if I see 5 waves up from a new low. Okay, let's say that market will see new low and then it will recover with 5 waves. Then we will exactly know in which direction we should trade and where we should place the stop losses, because right now at this stage it's still a bit risky, especially if you have still dollar index showing up incomplete bullish structure, especially ahead of this Fed rate decision. Now someone also asked earlier for dollar yen. Now dollar yen is making some very strong recovery, quite surprised here, but maybe that's because of, as you know, because the US treasuries are coming to the downside, because no one wants to speculate on Japanese yen ahead of Bank of Japan rate decision, which I believe it's this week. So dollar yen is now maybe more linked to overall dollar trend, but these dynamics may again change when Bank of Japan will be on focus and not Fed. Okay, now firstly we have Fed, and then markets will focus on BOG. So that's when we could possibly see some new reversals, new swings. But overall, I still think that it's a very strong resistance here around 155 all the way up to 158. Okay, firstly I thought that that was a top, but I'm not really that certain anymore. However, I said that this dollar yen is somehow, I use it like a proxy for yen crosses. So if I see dollar yen at the resistance, maybe yen crosses will give you much better looking wave structure in which direction maybe they should trade. And let's say that dollar yen is right now at a 61.8% of this current decline, and if dollar yen will stop here and move to the downside, then yen crosses could potentially see much more downside at the same time. But I would not be touching dollar yen, because I clearly understand that dollar and Japanese yen are both safe havens, especially when it comes to risk of flows. Okay, so that's why I think that it's much better, a clear direction can be discovered on yen crosses rather than this one, especially if you're looking for some Japanese yen longs. Now if we take a look on crude oil, not sure if we if we touched this one last time. But I think that despite some sideways price action, maybe it's not bad idea to look at it, because keep in mind that always when there is a very slow price action, okay, and when there's no a lot of going on and traders are not interested in this market, well, that's exactly when we should be prepared on a potential breakout. So in Elliott wave terms, I still think that that's a potential to count as a triangle, which will send us lower at the start of 2025. Maybe we are now going to see wave E towards 71. The ideal resistance obviously would be around $74 or so, but overall I just think that the current rally can still face the limited upside. So be aware of decline in 2025, and I think that $60 per barrel is certainly very possible here. Not only with this wave count, I also have another wave count which shows that maybe that's an ongoing wedge pattern. So then 60 would be very important and strong support. So that's why I'm saying that maybe in 2025 at the start of this year we could see this level coming. Also, if you look maybe at this market from more technical perspective, this could also be ongoing head and shoulders formation, top formation. Here you have a broken neckline, and now this neckline already was tested once as a resistance, so maybe we will see after some recovery we will see new and further sell-off here. Okay, now on your favorite ones, metals. So what's going on here? As you know, metals, in my opinion, still in consolidation. You are in the middle of this wave 4. Okay, so if you're looking to be if you're looking for some opportunities on metals, I just keep in mind that there was a look at these moves. Okay, it was a massive move to the upside, 50% or so this year. So definitely it's something that you have to consider. So you want to have some better entries, more healthy pullbacks before you want to ride this trend to the upside, especially if you're looking for some opportunities where you will hold these trades maybe for a few months rather than just a few weeks. So I think that much better supports are still lower. I would be watching levels around 2300 to 2400. I think that this one is quite attractive. Now this one can be quite attractive, especially on the downside, because that was a pretty strong sell-off here. Okay, so that was the first indication that we are stepping into a corrective sideways price action. Now sometimes wave 4 can be very tricky, not always easy tradable or recognizable, but especially when it comes to pullbacks on metals in downtrends, silver can have much better looking wave structure and maybe much better trade setups on the downside, because silver will usually be weak, and that's also visible through gold silver ratio. Okay, we've been talking about this gold silver ratio a lot, and as you know, so far we have seen a pretty nice, if you zoom this in, we have seen a pretty nice recovery here last week, and looks like that there is a plenty of room here for this ratio to continue to the upside. And if you look here and compare gold silver ratio with silver and gold, you can see that silver has seen a quite strong and deep pullback decline here in prices when gold silver ratio was moving to the upside, but at the same time even gold did not produce any kind of significant returns. In fact, it was mostly sideways. Okay, so of course in downtrends gold will outperform silver. So now if I think that metals are in a correction and I want to look for potential shorts, then silver would be my best option. And with that said, if you look here at silver, you can see that we very nicely rallied into this resistance area that we talked about last week, and more importantly we stopped up there. Okay, it would be completely different picture for me if, let's say, we would finish the week around $33 or so. Then obviously I would be aware that there can be even higher prices, at least in the near term. But because the market respected this level, it came to the downside. It even can have a potential head and shoulders here. Okay, I just think that we should be aware of more weakness. That's one thing. The next thing is that you have here, if you zoom in a little bit, you can see here a bearish bearish reversal candlestick. So it means it was a open here, new high, extremely bearish close. That's a bearish continuation pattern which signals for more weakness. And even if you look at the weekly candlestick, you can clearly see that all of the bulls that were seen during the week were completely erased and market closed in red. So in my opinion, that's another indication that shows that bulls are not ready to be on control, but that this correction could last. So in my opinion, there is a chance for much more weakness, and I think that that silver could revisit easily $29, if not even lower. Let's not mention this very strong and powerful ending diagonal here that we've been tracking quite closely weeks back. Okay, another important market for metals is obviously Chinese yuan, and you can see clearly here that dollar Chinese yuan is still in uptrend. So I think that if Chinese yuan will weaken, that gold will either stay sideways here or ideally even move to the downside. But even if it stays sideways here, as I said, silver could be retesting the lows, and maybe gold will not even come close to this 2005.40, which was the high for the low from mid of November. But overall, this dollar Chinese yuan is just showing that why I also think that maybe overall dollar uptrend is not completed yet. But once we will be at these levels here, possibly at the start of 2025, as I said, that's when very big changes in trends could occur across the board. By the way, guys, please make sure to like this webinar, to like this video, or just leave us a comment if you're watching this recording later, and make sure obviously to subscribe to our channel so you will be notified when we are uploading new content here. Okay, now German DAX. As you know, DAX is outperforming the S&P 500 for at least for the last few weeks. I think that we have some much clearer wave structure, I should say, compared to the S&P 500. So if you're looking at some opportunities within this risk on mode, I still think that maybe DAX is the better option than the S&P 500, especially if they will deliver hawkish cut. Who knows? The stocks in the US could easily see a very deep retracement there. But here on the DAX, watch for the support if we see a dip here around 20,100 to 20,200. Okay, that could be the lower side of this potential range for this week of this wave 4. So I think that that's still a healthy uptrend that could resume after this current pause. But when it comes to, as I said, US indexes, let me just open here. I really think that there is still a chance that we are in the late stages of this recovery. We even have these wedges showing for potential top formation on plenty of indexes. Here we have equal weighted on Nasdaq 100, and I just think that this is not the best place to look for potential longs, if you ask me. I still think that we should be aware of some deeper correction. Not sure if we'll show up, but I definitely would not touch this market for now at these levels. Simple as that. Now, if we take a look maybe on some of the single stocks, let me check my list here. Nvidia, as you know, we have seen move out of a triangle, or possibly we even have an ongoing wedge formation here, an ending diagonal. So I still think that 2025, at the start of this year, you should be very careful with this one. And I think that if we'll see a reversal to the downside, this will have impact on cryptos as well. Okay, despite this news that US is ready to buy 200,000 of Bitcoin each year for their reserves. I mean, these are such strong news that usually will occur at the highs. We also have MicroStrategy that will be added to Nasdaq 100 index. Again, these are all all of the things that will usually occur at the end of very good trends. So be very careful, don't be naive, because market will not just give you the simple straight move to the upside with the price action and will award you. There will be some retracements on the way up, and I think that you should be aware of a very strong reversals, especially on cryptos, or a pullback at the start of next year, or maybe even earlier, as I will show you on a Bitcoin a little bit later. Now, also, if you look here on Meta, here we have also this 5 waves up, so it means that we should be aware of at least of a 3-wave setback in the near term. Then you have, as I said, MicroStrategy. I added it here. This one is also quite a nice and strong push to the upside, but looks like that we are in consolidation. What I would be watching for potential key support is here around 270 to 320. So if we see this wave 4 testing these levels, that's the key zone where we should stabilize. If not, and it will just start falling sharply through it, and let's say we suddenly see 200 levels, then I just think that we should be aware of a deeper price action, especially if then you also consider that this alternate scenario shows a potential triangle, and we know what follows after a triangle. However, I don't want to say that that's a top, especially if the wave count itself allows me to count this as a wave 4, and we could see another push to the upside. So if you see some deeper correction here, watch this level, it should hold. If not, then I think that we are in danger here. Now, let's take a look on here on cryptocurrencies. Now here we have the crypto total market cap. As you know, we are tracking, by the way, that's the app from members where we upload all of these charts. So if you're interested in these updates daily, make sure to check our services here at wavetraders.com. Now, if we take a look here on a daily chart of crypto total market cap, we can see that wave 3 is in progress, but can be in late stages. So again, be aware of this retracement, of this pullback. Also, if you look at here, maybe even here, it's better. If you look here on the 4-hour time frame, keep in mind that the recent move out of this consolidation looks like it's coming out of a triangle. So again, we know that what happens after move out of a triangle. It means you will see a 5th wave, final lag, final substructure within higher degree impulse. So you should be aware of this wave 4. Okay, now in ideal scenario you will see something like that. So the idea here is not to gamble here. Okay, if you are in already for the last month, 2 months, that's different story. You can still keep turning stops to the upside or take some profits off the table. But overall, if you're looking for new opportunities, you have to wait on some new liquidations that should occur in this market. We have seen some liquidations last week, but when looking at Bitcoin here, maybe alt season still is yet to come, and it will be much better opportunities on some of the altcoins, especially if Bitcoin would really slow down here and move into a correction. Why I think it can move into a correction is also this interpretation, which shows that maybe 100 and here around 108, 110, 110 could be potential limited upside. Okay, I also am tracking this wave count, which shows the potential ongoing wedge or ending diagonal. Same but same stuff. We are in late stages of this recovery then, and that we should be aware of a higher degree pullbacks. Now, what I would be watching for this ending diagonal, maybe to potentially become our primary wave count, is what will happen here around 100,000 level. Here we basically, okay, we started break to the upside yesterday, okay, but futures, okay, Bitcoin futures obviously have a gap here because they closed on Friday. So those gaps sometimes can be filled, and then once they are filled, they will see a new push to the upside. So that's why I'm saying that on futures 101, 102, it's 1000 level is a very important potential support. So at the same time, if really this gap will cause a new bounce to the upside, maybe we will also have a deal with an ending diagonal rather than move out of a triangle. But even this one suggests that there could be some limited upside. So again, be careful up there. Don't chase markets up here because it can be a bit late. And as I said, maybe some alt season could show up if we see some unexpected reversal here to the downside and correction. Then maybe Ripple, this one I believe has a very beautiful pattern. Basically we found some very nice support here at the previous highs, and what's the most important is that a drop has unfolded in 3 waves. For those who are not familiar with the Elliott waves, or who is watching this webinar for the first time, whenever we see some very strong recovery and you have only 3 waves from the highs, that's the most basic structure that you should pay attention on, because whenever price starts turning back to the upside and you are able to count only 3 waves to the downside rather than 5 waves, then you know that that was only a correction, a pause, and that we can expect that price at some point will revisit the highs. Okay, and so these are the substructures that you want to pay attention on whenever you want to join the trend. Now regarding the Ethereum, I think that this one still could be very interesting. As you know, ratios are very low with the Ethereum, and I think that if we see some pullbacks towards 3,000, maybe just 3,300, I think that should be a very important and big support zone for the Ethereum. Okay, someone is asking, Gregor, do you think Dash is making a wave too? Okay, let's take a look on, basically I will take a look here. By the way, we are updating this Dash, not really wave 2, but possibly we are now in a wave 4 pullback after massive move out of an ending diagonal. And for those who were with us in our webinars in the past few months, you know that we have been tracking this ending diagonal quite closely. And by the way, we highlighted a few of these patterns on different markets today. So definitely there are very powerful patterns that you should pay attention on. Okay. Okay, traders, I hope that you enjoyed this webinar today. Be careful this week. We may not see a lot of dollar moves in one of direction till we get these announcements from the Fed, and then we will have Christmas holidays, so it can be quite volatile end of the year, but it doesn't mean that it will be in one direction. So make sure you will always put your stop loss in and that you have a control over your risk. Traders, once again, thank you for being here and talk to you soon. Bye.